Hello and welcome to Lipper's Fund Flows Insight. I'm Matthew Lemieux. We're back again looking at weekly flows numbers for the week ended May 16th. And investors continued to struggle as equity markets really had a hard time finding their legs. A lot of downward pressure in the equity markets. S&P 500 as of ending Wednesday was down another 2.3%. And really a lot of this again coming on the heels of concerns overseas in the Eurozone and how they're going to continue to deal with Greece, as Greece has a hard time trying to form a government. And that I think also paired with some May pressures, some selling pressures. I think a lot of investors have seen that as equity indexes start to drop, they're coming closer and closer to where they began at the beginning of the year. I think Dow Jones on Wednesday was just around 50 points off of where it started at the beginning of the year. So some investors probably at least want to take some of the profits off the table if they're still there. So let's see how this kind of translated into our flows numbers. If we actually look at our macro groups, we see overall that net flows for mutual funds was pretty much zero, flat. And really a lot of that was due to any of the flows that we saw for equity taxable bonds and municipals really offset by outflows in the money market area. If we see equity funds, they actually were able to bring in about $200 million. Taxable bond funds continued strong, about $2.8 billion of inflows. Municipals also looked to be a good place to go with $800 million of inflows, but again, once again, money market funds really offset those on the aggregate with $3.8 billion in outflows. So overall, we saw good things for equity. It was the second consecutive week of inflows. Let's kind of take a look and see how those have really kind of panned out. Looking at them, once again, at $200 million, really kind of spread a little differently as we see. Non-domestics continue to bring the bulk of assets, even though that's very small, $212 million, while domestic brings in only about $33 million. So it seems that investors still feel pretty comfortable looking overseas. A lot of that non-domestic money is going into emerging market type mutual fund products. But again, there's another side of the coin. We've been talking kind of about mutual funds. Let's take a look at ETFs and go to the next slide. And what we see here are the top eight ETFs by assets. Overall, ETFs pushed out about equity ETFs pushed out about $2.9 billion. And as you can see, Spider S&P 500 really led that downward trend with almost $3 billion of outflows themselves. Also, we saw the MSCI emerging market product saw about $520 million out. So a lot of investors really pushing some money out of the ETF space. Again, I think it's kind of a move into May as we see that concern, as we see some weakness in the equity markets. That's really going to be the first place that sees the redemptions coming out. Taxable bond funds, though, again, continues to be a bright spot for the fund industry with $2.8 billion of inflows. This is the 22nd consecutive week of inflows, and in this group, it's pacing about $3 billion a week based on its 4-week moving average. One thing we did kind of see is that there seems to be a little bit more interest and people are committing themselves more towards investment grade, high quality type products. Investment grade funds brought in about $922 million for the week, while high yield still brought in some money, about $229 million, but a little bit lower pace. Again, probably some effects of the equity markets there. Mortgage funds brought in $444 million, and this group continues to do quite well as it is its 24th consecutive week of inflows. So investors really still feeling confident about mortgage funds. But then let's again look at the ETF space. Let's go over to the ETFs. Once again, same thing. We're looking at the top 8 by asset. Overall, taxable bond fund ETFs pretty quiet in the aggregate, $385 million of inflows. I think if you look, I've got highlighted here one of the big stories for the week was the Spider Barclays high yield product, JNK. Saw about $870 million in outflows. This is the largest on record for that product. A lot of speculation out there. It seems like a big trade, possibly linked to some of the JP Morgan problems that we've seen in them trying to hedge and unwind some of their positions. So a big outflow there. Another point to talk on is Treasury funds. We've talked a couple weeks about this, and again, it kind of talks more about a flight away from risk. Treasury ETFs pulled in about $721 million for the week. This is the 6th consecutive week for those specific products, and they've seen about 12.8 billion in inflows thus far this year. So people are kind of going more towards Treasury and towards less risk on the taxable bond side as well. The next group we're going to talk about is municipal funds. Municipal funds continue to do quite well. As we said, about $800 million in inflows to this group. If you look at the breakout, national munis made up for about $657 million. Really, that group is anything other than state-specific municipal debt funds. And as a subgroup of that, we do see some investors actually reaching out for yield, as high-yield municipals see about $228 million coming in. For munis overall, we saw 5 consecutive weeks of inflows, so it is somewhat strong. And for them, about year to date, $18.2 billion. So a lot of people going back towards munis. It's picking up some pace. They're feeling more comfortable with that as they know that there really isn't as big of a default risk in that market as we've seen over the last couple of years, or has been perceived over the last couple of years. The last group we're going to talk about is money market funds. Money market funds continue to struggle. They had a bright spot a week ago, but again, $3.8 billion out this week. And if we take a look at the breakout, we see that most of it came from the institutional side, about $5.9 billion out of institutional, and we actually saw about $2.1 billion of inflows into the retail. So once again, kind of playing into that story, investors are feeling a little less comfortable with the situation in the markets, pull some money off the table, May selling, all of those things kind of maybe come into play. So retail investors really putting money back into money market funds. So overall, we'll have to kind of see how this concern goes forward. I think Greece is going to continue to be a concern, and see how the Eurozone really takes care of that. There have been concerns on runs and banks over there, you know, the concern about the Greek government being able to form a government. And we'll see how that goes forward. One bright spot, or I guess one thing that a lot of people have been anticipating this week, is today Facebook did open up for trading. Even though it's been a little bit rough so far as of this taping, I think they're still trailing a little bit under their opening at $42. So we'll kind of see how that goes forward. And again, if you're kind of paying attention to the politics side of it, the policymakers, there has been some grumblings that we may see another fight in U.S. Congress over the debt ceiling. So a lot of uncertainty, I think, out into the short and midterm, and we'll have to really see how investors take that going forward. If you'd like a little bit more information about the flows we're talking about today, you can go to our website. It's www.lipperusfundflows.com. Gives you a better idea of our coverage, and maybe give you a little chance to dive a little bit deeper into that. Otherwise, you can join us next week as we review these numbers. Once again, my name is Matthew Lemieux, and we'll see you next time.